it could get worse before it gets better. But all right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about a company called Romeo Power, stock ticker RMO. This is a small cap, high growth stock. We cover those a lot on this channel. So if that's content that you're interested in, or if you're new to the channel, please remember to subscribe and hit the notification bell. And of course, if you enjoy this video, please smash the like button. And if you have any thoughts or comments, feel free to leave them below. You will find a link in our pinned comment to our free Discord. We're making a push for 500 members in the Discord, so we'd love to have you over there. Let's talk about Romeo. Romeo reported earnings this past week, and at the same time, they have hit their 52-week low multiple times recently, including on Friday. So if I look at Romeo stock, they're trading at $1.37. This stock has traded between $1.34, which was the low on Friday, all the way to $14.61 over the last 52 weeks. But if we look at approximately the last 60 weeks, it's actually a much bigger range than that. So when we get to the chart at the end, I'm going to go through that because the decrease in the value of this stock has been absolutely staggering. Like I said, they reported earnings this week. I've now dived through all their earnings. I listened to their earnings call. I went through their financial statements. And so I want to go through their presentation and give you my interpretation of how I think they did on earnings. Obviously, the market was not very pleased because the stock hit a new low multiple times this week. However, I am more optimistic, so I want to go through that and explain. I think they left people a little bit confused on certain issues, and one of the problems this company seems to have is in communication. I'm going to tell you how I interpret what they said and where I think they may have fallen short and can improve their communication in the future, because I think it impacts the price of their stock. But at the end of the day, this company's growth and profitability is going to be what impacts their price of their stock in the long term, and I do still see good things ahead for this company. So before we dive in, I want to show you they are now down at $1.37. They're down to a $184 million market cap. So before we dive in, I just want to put this in perspective. This is a chart of their market cap over basically the last year, the last 13 or 14 months. So you can see on January 11th of 2021, the market cap of this company was $2.84 billion. It is now $184 million. So I'm going to show you on the charts later that I think there was a bubble here. But even if we discount all the way to the bottom of that bubble, even 5 months later, they were still at $1.2 billion market cap. They had gotten some very bad news in the middle. We'll discuss that. And that is one of the things that led them on this massive drop off here. But even after the market digested that news for a few months, they were still a billion-dollar company. Then they leveled off between $600 and $700 million. They're all the way down to $184 million. So the deterioration in their stock price, like I said, this has been staggering. So with that said, let's go look at their earnings report. All right, the first thing I want to do is just quickly go through. They put out a press release before their earnings call, and I want to go through that real quickly and hit some of the high points. But first, again, I'm going to talk about their communication. They lead off by saying Romeo Power reports fourth quarter and full year 2021 financial results. Well, they don't report the fourth quarter results in this news release at all. And on the conference call, they figured out in the middle of the conference call that their 10K was not yet posted on the SEC website, and it was not posted on their own website. So nobody was able to read their financials prior to the earnings call. And that is not the end of the world. By the end of the day, their 10K was posted and there was a link to it on the website. It's just that type of communication does not inspire confidence in investors. And you can see with a stock that continuously is hitting its 52-week low, they just need to be careful about little details like that, because while that seems unimportant, you really can't make a misstep when you're hitting 52-week lows like this all the time. So let's see what they did say. Full year 2021 highlights. Delivered total revenue of $16.8 million, in line with prior outlook. So at the beginning of the year, the supply chain had dried out. They were unable to get any battery cells at all. So as a result, even though they had a huge backlog of sales and customers waiting, they could not produce any product. So early on in the year, they had to come out and drastically reduce their forward revenue estimates. And that's one of the reasons the stock took a huge hit. I mean, they literally virtually stopped conducting business for 2 quarters. However, the third quarter picked up quite a bit, and the fourth quarter picked up from there, which we will see in their presentation in a few minutes. So that's why I say I feel like good things are happening. They're trending in the right direction. But we got to just dig a little deeper than that. All right, they also go on to say that they finished up the year 2021 with cash and cash equivalents and investments of just under $120 million. So they have some cash in the bank. We'll put that into perspective later. Just going to hit a couple of the highlights here. Accelerated growth and commercialization by increasing 2022 average daily production rates by 37% over the fourth quarter of 2021. So that is important. Their production is going up rapidly. They're opening a massive, massive new facility in California, which is also going to greatly expand their production capacity, and it's going to get everybody under one roof. Completed the build-out of senior management, adding seasoned executives across the full C-suite. Management has changed quite a bit this year, but they now have the group that they believe they're going with, so that should present some stability going forward as well. Improved key availability for battery cells through a previously announced long-term supply agreement. So this is critical because it was their battery cell supply that ran dry. They've secured a long-term contract with a tier 1 supplier, and they're working on other contracts, and later we're going to talk about what one of their customers did to solve this problem for themselves. So I want to just zip through the presentation real quick. So 2021 financial results and 2022 outlook. So you can see this is crystal clear here. Revenue in the third quarter was $5.8 million. Revenue in the fourth quarter was $9.1 million. So that was a significant increase over the third quarter. These two put together are just under $15 million. Their total sales for the year were $16.8 million. So like I said, they were virtually shut down in the first quarter and the second quarter. Sales picked up drastically in the third quarter and then a nice pickup again in the fourth quarter. Now, they also provided outlook for the year 2022. And their outlook was $40 to $50 million. So they did $16.8 million in 2021. They're looking to do 40 to 50 in 2022. 50 million would be almost triple the 16.8 million that they did in 2021. So they have one major customer that went out on their own and got their own battery cells. Now remember, Romeo ran out of battery cells and the supply chain dried up to the point where they couldn't get any. So they mentioned in the conference call that customer was Nikola. They went out and got their own battery cells. So they are buying their own battery cells, basically leasing them back to Romeo to put into their battery packs and then buying the battery pack net of the battery cells. So that is a big part of the sales price. So had the sale of the battery cells been included in their 2022 forecast, they're saying it actually would have doubled to somewhere between $80 and $100 million. So, the bad news is it's possible they're losing some gross margin by being cut out of the loop with this one customer, their largest customer, on the battery cells. But the good news is Nikola has gone out and found a way for them to continue to do business with Romeo and get their business up and running. And it's the first business they're really getting up and running. So I think it was to the company's benefit. They talked about how battery cells are basically on allocation. So by their largest customer getting their own battery cells, Romeo will be able to use the battery cells that they acquire for the rest of their customers. So I think in the end, this is a good thing. It's not ideal. Obviously, the entire supply chain situation is very difficult for everybody, but I think this was a creative solution to move forward. Just want to show you one note from their financial statements to just further talk about their big customer. So footnote number 19 is concentration of risk. Customer concentration. So major customer number one in 2021 represented 62% of their revenue for the year. So that's up from 28% in 2020. But the thing is, based on their forecast, it looks like that's actually even going to be greater next year. However, in 2023 and 2024, they have some major plans to add several different lines of new potential customers. They're looking to diversify their customer base. So these are things that I think will pay off in 2023, 2024, and beyond. And in the meantime, they have decent guidance for 2022. So with that said, I just want to look at the chart. And I'm going to look at the chart zoomed out, and then I'm going to zoom in and look at it and talk about some potential price targets. So I want to show you what happened to this stock in a short period of time. So remember, their 52-week high was $14 and change. But if you go back just a few weeks further, back to December of 2020, that's now about 15 months ago, this stock was up to almost $40, $38.90. So there was a bubble here. So, on these small cap high growth stocks, if you watch the channel, I usually take this part out and just account for the fact that in December, January, February of 2020 and 2021, there was a bubble in these small cap high growth stocks. So in a short period of time, from December 28th until March 15th, so in 2.5 months, this stock fell 62.5%. And that was reflective of both the bubble that the small cap high growth stocks were in and the bad news that they had delivered in that period of time. However, what's more concerning to me is after this stock pulled back 62%, since then, this stock is down another 90%. So here we are now on the 4-hour chart. So this is from September of last year through right now, early March of 2022. So the first thing I want to look at is this point right here is only about 2.5 weeks ago. So if Romeo can just get back to where it was 2.5 weeks ago, and again, I think their earnings report was not bad. I think there was a lot of good news in there. This stock has just such massive downward momentum that it continues to move in the wrong direction. But at some point, in my opinion, and again, this is not financial advice, but I believe this will hit the bottom. I don't know that I've picked it here perfectly, so it could always go down before it goes up. We just looked at the fact that this stock dipped 62% and then another 90% from that point. This stock could go up 75% just to get back to where it was 2 weeks ago, basically. So I think that's an extremely realistic price target for this over the next couple of quarters. And I want to look at one other number. So this goes back to January 12th, which is just 2 months ago. It's actually less than 2 months ago. If Romeo could recover to where its stock price was just less than 2 months ago, that's a 154% increase in the price of the stock. And that would still only leave them at about $3.46. Which is historically low for them considering they were trading at almost $40 a year ago. And, more realistically, they were trading between $10 and $15 for quite some time. The thought that they could get back to $3.50 is fairly reasonable in my opinion. So I hold this in our 10K challenge. I think this company has a good outlook over the long term, but it has been very brutal the last 12 months. And there's no telling where the absolute bottom is. So it could get worse before it gets better. But for me, I'm including it in our 10K challenge portfolio because I believe there's a lot of upside left in this stock. And I don't think there can be too much more downside. So that's my opinion. Those are my thoughts on Romeo. Thanks so much for watching, and we will see you in the next video.